Hey guys, today is May the 4th of 2022, and I'm looking at the TV right now. I see Fed Powell, Chairman Fed Powell talking, but I wanted to do this quick update. I'm going to try to do it in less than 10 minutes or close to that in regards to gold cycles, kind of like a May update and see what's going on. I want to let you know I'm using a weekly chart data going all the way back to 2000, October around there. And the cycle that it's important here on this weekly, which I don't like, is the 247. It has a good correlation. As you can see, cycles are not perfect. It peaked here. You see that it kind of went sideways, then pulled lower. Then it hit a trough down here, and it continued going sideways to lower. And then it kind of continued going up, hit a peak up here, as you see here. And it started going just sideways while the cycle was going down. So you can see a pattern is that when cycles are going down, doesn't necessarily mean that price action is going to go down. Obviously, that's the first thing your mind will, think is that it's going to go lower. Sometimes price action just goes sideways, and it finds a low here earlier than the cycle trough, and then it shots up, going up. As you can see, this one kind of worked, and it went sideways. And now we're here. So this area right here kind of reminds me of what this looks like right here. But it could also go sideways. So the cycles are down going into July of 2023, somewhere around there. Price action doesn't necessarily have to go down. It could go down and then just kind of go sideways, find some support, or it could go down like it did here. So I just want to let you know that they're never perfect. They're never 100% guarantee. If not, we'll be all, millionaires and billionaires. But it's just something to look at just to kind of get a perspective. Okay, real quickly, let's see what happened in April, and let's look at what could possibly happen in May. So in May, we did a high on the 14, kind of pulled in. These are closes, mind you. And then we hit a peak somewhere around the 18 or close up there, and then it just tanked. If we use our 5-year, you can see that our 5-year average says that possibly around April the 13th, will probably be a swing high, and over here kind of looks like a head fake, trap some bulls, or pull the carpet. We use a 10-year. You can see that the 10-year was telling you April 11th. So April 11th, 13, potential swing high, and they pushed it all the way to the end, the 18, and trapped all the bulls. 15 doesn't really show that much data. It's just kind of going sideways, sideways to higher bias. So we can't really get any, edge on that. I think it's between the 10 and the 5-year average seasonality. So now let's look at where we're at right now. Using the 5-year average, it shows for a potential pop into all the way into June the 6th, or the first week of June. That's the 5-year average. So whatever happens with the Fed, whatever he's saying and whatever, how the market takes it, digests that for the next couple of days, this could probably be an outcome. Although you see that the cycles I showed you earlier are pushing lower into May and into June. So you can see that there's an inverse in regards to seasonality and what the spectrum cycle analysis is telling us. Now, the 10-year kind of lines up with the cycles. Looking at the 10-year, it says that it'll continue pushing lower into May the 27th, or that week, and then kind of get a nice little pop, kind of go sideways, and maybe continue trending higher. Okay, this is another seasonality chart. With the last chart I showed you on the previous clip, that kind of gave you some dates to kind of narrow down to do a scalp or a swing trade. Here is just to kind of back up what the other data was showing us. As you can see, this is a 5-year. You can see that June is a little flat, May is a little stronger, April's a little weaker, and you know that we made a swing high in April. Taking this and going 10 years, kind of slowing down here. There we go. 10 years, you can see that April, the swing high, April 18, April 14, 13, and goes weak into May and into June, and then it gets strong into July and August. So that's a data set you want to keep a note on. You can see 15 years, April, May, a little stronger. June is kind of flat or just kind of, 50%. And July and August, a little stronger. Through the 20-year, April, a little stronger. May flat, and June just a little weaker. So last week of May, first week of June, somewhere in the middle, possible swing low, push higher into July and August for scalps or, swing trades. Last chart I have is the simple glance. There's a few I'm going to show here. So far, gold is trying to stay above this 1875 level. You can see it on the weekly, very strong. Although we have a negative MACD, the last 2 weeks have been negative in regards to volume. EPS sell signal below the mobile band. But you do have the 50 SMA at 1838. So there's a lot of support. There's a lot of support here. And also the linear regression channel. The point of control is at 1783. I'm sure if it gets down there, bulls are going to either find that attractive or if it pushes even lower. But I could kind of see it finding some kind of support here. So this is where a lot of the volume has been taking place within the last 5 years. On the daily, you can see that it's negative below the cloud. The Kumo cloud is forecasting a negative price action. Linear regression channel is pointing lower. Although I will say the MACD crossover is a little positive, indicating maybe a possible bounce, especially with all the Fed news coming out today. Maybe a nice little bounce. Maybe kiss this 1929 or this 1915, and then maybe continue the trend lower. Another chart I want to show you that's kind of giving me a little hopes here is this squeeze play chart on the monthly. You can see that the momentum is building to the upside. So you can see that we got a low here of 1848. We're trying to push lower. There's a resistance level 1964. Look at all this buying pressure right here, trying to maybe at least get above the 20 and maybe above this pivot of 1893. This is the weekly, monthly, and right here, this is the daily below the 20 and the 50. And you're kind of in this range right here between 2003 and 1949, pretty much 1850, around 1848, 1850. And this right here is the 12-hour. There's this big gap, and you're now below the 200 on the 12-hour. Let's see how that plays out. And let's see, is this Fib grid levels you want to keep an eye on? Is that 1916, which is right here, and also that 1788. If it pushes lower, that could be a potential target. If it closes above 1914 and it pushes higher, you're probably going to be maybe retesting or even kissing the 2120. That's a Fib grid level. And the last chart right here is my midpoint chart. As you can see, if it continues pushing lower, the 50% previous yearly range was 1817. That could be a possible target. And if it pushes lower, next level will be that 1673, that low. And that's on the yearly. On the monthly, you can see that you're negative. You're below the monthly previous range of 1985. And you're hovering around right here. Let's see how it plays out. On the weekly, negative because you're below the previous range, and now you're in this week's previous range, which is at 1904. We got a nice little pop today, so let's see how that plays out. Or actually, this today, because this is a 30-minute chart, but with a weekly data set. And this is the day. You can see that we've been holding at 1864, which is this 50% previous 50% range, and see how it goes there. So to conclude my thoughts, I wouldn't be buying gold right now. I will wait towards the end of the May, early June, mid-June, to be looking and seeing price action to see if it's going to confirm a possible swing low. Those are my thoughts. Hopefully you like this video. I'll keep you posted on my thoughts on gold using cycle and other techniques.